Money Show.
Stock Pick Monday.
Time to look at a couple of companies into which you might want to put some money if you're feeling a little bit flush and you think that you can make a buck. Devin Shutte is the head of investments at the Robert Group. He's on the line to us from Ballito this evening. You're going local as far as you're concerned, Devin, this evening, looking up the road to the Aspen Pharmacare building and thinking, yeah, it's not too much trouble to analyze that. I'll take it. Aspen Pharmacare.
Yeah, look, why not? We've got to make investing as easy for ourselves as possible.
Okay, tell me why you like Aspen other than the fact that it's conveniently located for you.
Sure. So, Bruce, Aspen really a global pharma company and maybe one that is kind of underappreciated by local investors. Still got a really strong emerging market focus, but massive scale now. And, you know, for the people that have watched it over the years, through the GSK deal and all of that, it's really kind of come into its own, I would say, in the last 2-3 years. Just to give you an indication, even locally, of how big this producer of drugs is, you know, whether they're specialty or generics, 1 in 4 scripts in South Africa are for Aspen products, and it manufactures 24 billion tablets a year.
Sorry,
so,
it manufactures 24 billion tablets.
That's right. So, you know, you've got a company just down the road here that's operating in 150 countries, manufacturing those tablets, and is now, outside of the USA, probably the biggest manufacturer of anesthetics on the planet.
Some stunning statistics coming through. Are their profit margins good enough? Is their debt not too high? These are the issues that are thrown around on a regular basis about the concerns around Aspen Pharmacare.
Of course. So, I mean, you mentioned the profit margins. These are great. You're looking at over 50% gross profit margins for the business. They eke that through the integrated supply chain as well. Debt is something we watch closely, particularly, you know, what's happened in recent years. But we feel it's under control. They've also come under question around the level of intangible assets. But that's a key part of their business, and, you know, they hold really quality brands in that regard. So we're comfortable with that. Another growth area of the business, just worth mentioning, is in infant formula. Huge potential, particularly out of China. Currently only 8% of group revenue, but Chinese are looking to ban a lot of the more informal operators, which will probably reduce the number of brands in the country from 2,000 to less than 500. So we think they're well positioned in that market.
Then what about Investec? Here's an interesting pick. I don't think we've had Investec picked for ages.
Yeah, look, I mean, it's a specialist bank, so, you know, you've got the normal type of banking operations, which is about half the income, and then you've got the asset management and wealth management business, established in the 70s, and, yeah, really a lot of things going for it. You know, if you compare it to the other big banks in South Africa, it's the most liquid, least geared, which is also probably where you want to be in this type of environment. And, you know, because they have this very specific client base, you know, they want to be banking the more affluent members of our society, very, very high credit quality. So that all kind of rolls up into a really strong balance sheet and a good capital base. We also like the geographic diversity. So, you know, they've got operations, as we know, in the UK, Australia, and Asia. And although the UK has been dented somewhat, we're seeing those businesses start to emerge quite nicely. And then what really attracts us to this business is, of the revenues it generates, I mean, whether it's from the capital-intensive normal banking or the capital-light asset management business, is 3/4 of those revenues are annuity income. So very predictable business, going through a management change at the moment, but also lower risk with its strong balance sheet.
And then your final pick this evening is Santova.
Yeah, I thought I'd throw in something a little bit more racy here. So this is a small cap stock. It's a logistics operator and supply chain management company. But what's interesting about what Santova does is that it's a non-asset-based provider. So they don't own the ships and the planes and the trucks that your traditional logistics operators would own. They run this very clever technology that kind of links their clients' requirements from, you know, to get box from point A to point B with whichever logistics providers they feel can add the best value. So they they're a lovely little company. They operate all over the world. They've got offices in 7 countries at the moment and growing quite quickly. 60% of the revenues come from outside our borders. They're growing profits very nicely. Headline earnings up over 10%. And one of the key growth drivers that I see here is they're tapping into that small package delivery growth. You know, all of us know it. We get that Take-A-Lot package on our desks probably more regularly than we have been recently. That globally is growing at over 20% a year in volumes, and their unique solutions are tapping into that and allowing that small package delivery to happen globally.
It's an interesting one. Thank you, Devin Shutte, who is the head of investments at the Robert Group, based in Ballito. And, local company is Aspen Pharmacare. It's in Umhlanga Rocks, just up the road. Aspen Pharmacare gets the thumbs up this evening from Devin Shutte. Investec and Santova, a really interesting triple of companies in which you might want to invest if you are in an investing frame of mind on a day where the JSE, for the first time since about February, went back into the black as far as this year is concerned. Remember, we had the Ramaphosa era. It was those days of good, solid gains that came into the market in December and again into January. And it felt like markets were going to have a stonking 2018. Then we had a stinking 2018, and now we're back into the black. And it's all as a result of markets finally getting a bit of an uplift from a bit more certainty coming through from the US Fed. That came through on Friday at a place called Jackson Hole. I think it's in Wyoming, where the world's